What is up everybody, Gifford here, and today we're going to talk about why stocks drop big, just like the ones in this graph. You see these drops usually around when the company has the earnings, so today we're going to go over exactly the 3 things that you need to look for and why it happens. So the agenda of this video is why do stocks drop big, what happens, when this happens, what's the cause of the drops, what are the 3 main metrics, and how do I find the analyst expectations, which is the reason of why these drop. Also, something basic you should know is how you listen to conference calls. And at the end of this video, the main one is how do I profit from this. The single big reason the stock drops during earnings is because it reports bad financials. And during these sell-offs, they're so damaging to the company that the stock price can drop by over 50%. So public companies are required to file 4 quarterly reports. And in one of these quarterly reports, they'll have an annual report for the last financial year. And usually on the day that the reports are given out, there's going to be a conference call with a Q&A, and this usually has the CEO and the other management team in the call. And within the call there's a lot of information which they talk about, which sometimes drops the stock. And if you're wondering the date of these earnings or when your company does it, you just simply go to the company IR website, which is the investors relations page. So what is the cause of these drops? Well, basically a company has 2 targets which they are judged on. If they miss on these targets, it usually means the price is going to drop. So there's many metrics that a company reports on, but to me there's 3 main metrics that you should be looking out for. And they are, if they miss, are its EPS analyst targets, its revenue analyst targets, and lastly in the earnings call there could be some unexpected negative news that the investors are not ready for. So the first one is, how do you find these analyst expectations before going into earnings call? So before I tell you where to find the analyst expectations, one of the reasons why you really want to know this and understand your company is because if you don't think that you're going to hit these expectations and the stock price is going to go down, you can either wait to buy more of that stock when it does go down, or you could sell some stock if you really think that the company fundamentals have changed. So let's now get into how we can find these analyst expectations. So the first one is EPS, and I just basically use Yahoo Finance. So the EPS expectations can be seen here, and basically this white dot indicates what they were expecting, the analysts. Here you can see that the company has beat it previously before, and if you're wanting to know when the next one is, July 25th, and you can see it's about $2.25 to $2.30, I can't quite see. And if the company beats the EPS expectations, they're more likely to go up. But if the stock price does go down, even though they do beat the expectations, it's not really a reflection of the company. It just happens sometimes. And with the revenue expectations, you can look them up as well, but I don't really bother about that so much because I just wait for when the report comes out. So here is an example of the revenue. So Tesla just reported first quarterly earnings for 2022 and beat analyst expectations on the top and bottom lines. Here are the key numbers. So here, earnings per share, they got $3.22 versus the expected analyst targets, which was $2.26. And here they state the revenue is $18.76 billion versus the analyst targets of $17.8 billion. So this is top line, which means it's not the earnings, the profit margin after everything is taken off. And at the very bottom, you can see the outcome that the share price rose as high as 6% in the after hours trading after this good news. So the last part to this is, how do you listen to the conference calls? Well, that's pretty easy. You just go to the investors relations page of the company, and then there'll be a button there which will take you to the conference call. You can listen to it live, you just have to log in and then wait. Some calls take about an hour to 2 hours depending how much they talk through the financials and all the other company information. If you do log in, you will be required to input some personal information, just like your name and the country that you're listening from. If you don't want to do any of that, what I like to do is I like to actually log on YouTube once I find out when the conference call is out. There's always a YouTuber that will be live streaming it and probably giving some commentary, but that's the easiest way for me to listen to these conference calls once I know what the date is. So lastly, how do we profit from this? So I've got some bad news on this because the stock price will pretty much react faster than you can by buying or selling. And these earnings are released before and after market close, but even if you have access like I do on Interactive Brokers, you're still not going to be quick enough to be able to listen to it and then buy stock or sell stock. It pretty much happens instantaneously because of the algorithms that trade this. So with the algorithms, it's not always people sitting there clicking on them. There's actually computers reacting to this news faster, buying, selling stock the way it is that's set up for it. So, and take it from me, trying to predict the share price movement in the short term is pretty much gambling or risky even on the stable stocks. And I know very well that some of you who watch my channel and see my trades are going to say that I'm not investing either, but I totally understand this. I am in some pretty risky stocks and I don't advise or recommend you follow what I do. Again, I want to say is that short-term trading is not investing and it's very much gambling. Instead, what you should do is find very good companies with good fundamentals and invest for the long term. And always remember that if the company reports bad quarters, it's not always a reflection of the true company's performance. There are going to be situations when a company is going to struggle and underperform some of the expectations that they've been given at. So what you're looking for is that it has a good CEO, it has good management, and overall the company is progressing, not on a short-term basis but on long-term basis. And the stock price can go up and down because businesses all the time can get mispriced. So if you see a company and you think it's cheap and it's being mispriced, then that is the ideal time to buy it. And again, if the fundamentals doesn't match the share price because people are just absolutely buying it and are paying way more than what it's worth, then it might be a good time to trim the position or take profits. So there's many metrics that can drop a stock during the earnings of a company. However, those are my 3 common ones that you see it dropping. And these reports aren't the be all or end all because this is the quarterly report, and really what matters is the annual report and how the company is going. But also understand that they're going to have a few bad years. But because it's a bad thing to time the investment, you really want to stick through with these companies and follow them along and keep putting your money into the good ones, because eventually they will reward the shareholders once the company starts skyrocketing up. And when the company is actually performing year on year, you would have already built up your position. And then when the other people realize, they're going to be piling into the stock and then driving the price higher and higher. This is why you can't really time it, and you should really focus on company fundamentals. Also with these reports, you want to consider the macro environment of which the company is operating in. So currently we have war and supply shortages, which means the results will be a little bit weaker than what they usually are. So just want to go over one example of a company that had bad earnings but actually turns out to be a massive company in the long run. And it's pretty obvious that this company is Apple. So reading Apple's value sliced in half September 29, 20. So Apple's ticker symbol AAPL market value was sliced in half on Friday, its shares falling to $27.75 to end the session 51.9% lower. And this reads, after Thursday's closing bell, Apple warned that its fourth quarter profit would fall well short of Wall Street's forecasts. The company blamed lower than expected sales in September and with particular weakness in the education market. So if you had this company right on the day it dropped by 50%, would you end up keeping it? So you really want to ask yourself, if the stock price drops by 50%, how did the fundamentals behave? Did Apple itself fundamentals change by 50% lower just on that, or was there overreaction to the news that was given out? Because remember, this is just one quarter. What really matters is the whole year performance and then what they're going to do in the next 2, 3, 5 years or even 10 years. So let's now quickly just have a look at the Apple chart. So having a look at the Apple chart, we'll just go to probably max. So I've got the price here, which is 93 cents, and that's probably because Apple stock has had a bunch of stock splits. So that $27.5 was at the time, and they probably had many stock splits. So the actual value it is now, looking back from it, is that it's 93 cents. Basically see the graph just absolutely take off. But you would need to hold Apple 22 years if it was today to be able to get these gains. So just for fun, let me drag this to see what the total returns would be for that period. And it's saying 15,718%. So that's basically 160 times the amount of money if you invested in Apple at that time when it dropped by 50%. Well, that's enough for me today. Thank you very much for watching. And if you're interested in stock market content and personal finance, feel free to subscribe. The trading platform I use is Interactive Brokers, Hatch Invest, Stake, and Sharesies for individual companies, and I use InvestNow for index funds. If you want to start investing, you can use any of my referral codes down below to start your own investing journey if you are from New Zealand. Also, if you want to hear more from me, you can follow me on Instagram as I post most of my trades there. Otherwise, I'll see you in the next one. Goodbye.